Today I'm joined by Ben Freeman, co-founder and CEO of Omnea, the leading AI native intake and orchestration platform that helps companies like Spotify, Wise, and the Adecco Group automate their procurement and supplier management processes using AI. Ben founded Omnea in 2022 and has built the business into one of Europe's fastest growing technology companies. He's raised over $75 million from some of the best investors in the world, including Accel, Khosla and Insight Partners. Before building Omnea, Ben built cybersecurity business Tessian, which raised over $130 million from the likes of Sequoia, Accel and Boulderton, before successful exit to Proofpoint. Ben is from Manchester and his early businesses began there and were not VC-backed or tech companies. So, without further ado, let's get on with today's Talent Talks podcast. So, thank you so much, Ben, for joining me on the show today. Great to have you with me.
Great to be here. Thanks for having me.
So, I'm really excited about today's episode because normally I have pure procurement practitioners come on the show, talk about their procurement career and background. You come from a very different background and a very different story. So, as someone that's never worked in procurement, how did you end up founding a procure-tech company?
Yeah, so it's a good question. And there's probably an investor version of this answer that is very sort of shiny and it all fits together perfectly. But the truth is, I'd been trying to start a business probably for maybe 18 months before I actually started Omnea. And that phase for me was the hardest. I was very existential. I didn't know what to do. For me, when I don't know what to do, that's like the worst mindset to be in. And I'd had a good run building this company, Tessian. We'd raised lots of money. We were dressing ourselves up for a pretty successful acquisition. And so the problem with that is I found fault with everything I looked at next. In the sense, I could find a flaw with the market or the dynamic. And it was actually my path to procurement. I can now connect the dots afterwards. But back in 2019, I became slightly obsessed with what was then price discrepancy in SaaS. So I used to see basically contracts just have completely different prices depending on all these random factors. And I thought that was a problem worthy of solving. So I almost left Tessian at that point to build a new company. But I didn't because I couldn't really get behind the market. And I was still very excited by Tessian, so I was torn. But for me, I realized back then, I suppose three core things. One was that SaaS is just one category. Software spend, fine, but there's all these other types of spend that matter just as much. So I realized there's no point building a point solution. I then realized, actually, procurement isn't just the money thing. Like, how much you spend with a supplier is interesting, but so is kind of the risk and governance. Where's the data? Are they safe and secure? All of those other things you have to care about nowadays. And then finally, I realized it was kind of a horizontal play. So you can't solve the thing for procurement. You have to solve it for legal, finance, IT, the requester, execs, everyone. And it's a collaborative space. And kind of when I realized actually you needed a sort of connected system, a collaborative tool. I thought about it in a very different way. And that's when I realized how vast the opportunity could be. And I got excited behind it. At some point in that journey, sort of the year pre-Omnea, I was frantically researching a few different markets actually. And I had investment offers for different things. So it really screws with your head because you've got optionality to do things. And I didn't take them ultimately. It probably took me the best part of 300-ish user interviews. I was basically speaking to any procurement leader who would take a call with me I was chatting to.
Information gathering and just understanding.
Yeah, just reaching out. And I just realized there were so many obvious themes that came across that I realized, okay, this is it. This is the space. This is why. And actually, it all then connected in a really organic way because I accidentally knew about it from building Tessian. Because we were an email security business. We sold to kind of mostly large enterprises, but really shiny customers. Most of the world's leading investment banks, law firms, loads of tech companies all use Tessian. So we had seen what you would think would be procurement at its best, but it was totally shit. So I used to look and realize, it was slowing down our business, which was painful. But these people on the other side of the fence in those deals stood no chance because the general experience, which I knew so intimately and I only realized after, was basically somebody in the business is like, yeah, I want to do this thing. Can we get it sorted? They throw it over the fence to procurement, who then have to, rapidly do the supplier onboarding. They're not in a position to negotiate because, the supplier's been told this or that. And it was just such a broken process. And the more you dig, the more you realize, well, they were destined to not have a great rep in this situation. Not only is the dynamic flawed, the tech is quite shit and old. So there were all these factors. So anyway, I could tell a story that makes it sound really kind of logical and, step by step. But actually it was a bit frantic at the start. And then once it clicked, I realized massive market, could attract the right talent and money, and, really build something that could be enduring and large. And that's what got me hyped by it.
Yeah. So in terms of where we are today in 2025, where's the business up to at the moment?
So we are just over 3.5 years old. We're about 150 people across London and New York. So just from like a scale perspective, we raised about $75 billion from Accel, Khosla and Insight. So we've got a great cap table, like a good setup for the future. And we've been highly efficient, actually, unlike a lot of our kind of venture-backed competitors who like to burn on marketing and whatever.
Yeah.
We don't really do that. So we're sort of in a spot where we punch well above our weight from a customer perspective. We work with lots of kind of every sector now, but some of the bigger tech names are sort of Spotify, Wise, Monzo, all the way through to traditional enterprise like Adecco, Albertsons, NetApp, and so on. So we've got an array of customers. We're growing very quickly now, but trying to kind of keep that quality high and the density of that high. So we about 5x revenue the past year or so. We're going through the Q4 is the busiest quarter of our year, so it's a super hectic time now. But sort of scale wise, I'd say we're still like a small to mid-sized company.
Yeah.
But this time next year we should look at least 3x larger. And so it's an exciting time, but not without its stress.
That's awesome. I mean, that is rapid growth in 3.5 years as a business. So how are you finding that as the CEO of this business that's growing, and legs is growing everywhere, and the new companies, and also you got lots of people? How are you finding that? Are you yourself personally keeping up to pace, or what's the?
Yeah, I think, how I find it absorbs your life in a way that I expected and wanted. So that's not sort of a complaint. It's not my first business, right? It's my third company and my second venture-backed one. So to an extent, I knew a lot of people talk about the chaos and the stress and everything goes wrong. It does, and that's true. But I kind of knew that and was up for that. And I think I kind of enjoy that. I kind of thrive probably under that pressure. So I'd say for me, I get my energy mostly around the people I'm working with, be that Omnians, the people, the employees as well, and our customers. So we've been very, very focused on like talent density, the relationships we forge. We've had a long-term perspective. So there are chaotic days, and there's obviously stress. We're sort of hiring approximately a person a day right now, and I still interview everyone. So just from like a capacity standpoint, obviously you're stretched, but I think it's probably the most energizing it's been right now, because there's so many people smashing it at Omnea, doing great stuff, and that's exciting to see. And I don't want to say it's all coming together, because I think I never really feel that. I think we could 10x and I'd still feel it's, there's a long way to go. Yeah. But there's definitely that sense of momentum and customers being happy. And so it's the hard work pays off if you keep going.
Positive energy breeds positive energy, and that's the fuel in the tank that allows it to continue growing. So reflecting back then in the first 3.5 years of the business, what do you feel you've done right? And I know you're naturally a little bit self-critical, but you've also done loads of amazing, really positive things. So what are you sort of proud of and feel you've got right? And maybe what did you sort of underestimate, I guess, with the market conditions and maybe just the business as a whole?
Yeah. I'll try and do this one concisely, because there's a lot to it. And I think if you ask me this question every 2 weeks, the answer would be different, because everything moves so quickly. Done right, kind of as I mentioned before, talent density, who we work with, we take that so seriously. There's so many kind of anecdotes to give here, but just to kind of put into perspective, we probably interviewed, I think, about 10,500 for the first 45-ish roles. Wow. So it's like we were properly, like I often say to people, I'm happy to, if we spend 10 to 20 hours with somebody and then concluding at the end it's not the right mutual fit, explaining why, helping them with that next step, but it's just not this one. That's more efficient than getting it wrong. And it's, even though there are downsides to this that we can talk about, because obviously we are capacity constrained, we need to hire faster, but I think that compounds in a really positive way. And you end up with people who deeply care, who want to be there, who worked hard to get into that situation. And it really does, it helps you tremendously, and everyone you interact with and work with can feel that and that it matters. So that's definitely a huge, something we did right. Another area, it's funny talking about positives. We don't do this very much.
Can I just ask on that point, was that self-taught for you? Because that's quite, that you're really sort of filtering down to ensure you absolutely nail the right fit for the business. So is that from legacy where maybe you haven't done it in the past, or is that just something you innately have always been when you look to hire people and get talent into into your businesses? And
yeah, I'd love to say I always knew. I definitely didn't. It was learned behavior. Tessian had incredible talent density, particularly maybe the first 50-ish. It was like, it felt so elite. I was, young when I was building that company, and I was really excited to be working with those people. And I think that business, by the time I left to build Omnia, we were probably 300-ish people. And I would guess, I actually haven't checked the exact numbers, but I'm sure we'd hired over 1,000 and lots had come and gone over the many years of building. Attrition was normal, but, people quit because of, Facebook gives them a big offer for this or that or whatever. And people come and go. And I think I realized to build an enduring company, it does just come down to the people, not only though their academic excellence or how impressive they are on paper, it's how much they care, how much they want it. Are they going to work well together and collaborate? And that's what it's about, mutual fit. Sometimes I'll conclude a process with somebody saying, I really think you need to just go start a business. You've told me how much you want to. And you're being held back by fear or insecurity or whatever, like just go do it. And then if it, or I might say, I might spot that they actually just want an easy life or a normal life. This isn't a normal life. Like if you join, it's going to be intense. It might be really fulfilling. So I think it's all about mutual fit. And it took me a while to learn that, because when you're like a hypey company or you raised a bit of money and you can sell a good story, you could easily hype people on joining. You could easily sell them into a role. And that would be the most toxic, dangerous thing to do. So I realized that, because I think, if I'm honest about it, I think post Series B Tessian, we'd raised a big round from Sequoia. That kind of put a bit of a halo on us, and we could certainly attract great talent. And we weren't doing so maliciously, but I think people were hyped up into their roles, maybe being sold that it would be an easier journey than it had been historically. And I think it gets harder each chapter. Like it's just, there's new problems, more pressure, bigger numbers. But so I think you've got to get people up for that. And definitely learned, but it's something now that I'm comfortable missing our hiring target, which is one of the flaws we'll come to, because the talent density is so high. That's a better equation than we got loads of people and the bar's dropped.
Yeah. I think you got that danger as well. And I've experienced that, where you have that sort of cash confidence where you think you're almost a little bit invincible, or certainly resilient to actually you're going to get your talent right. You've got a couple, for us personally, we got a couple of hires right early on. I think that was actually almost a bad thing that happened, because then I thought I just presumed every good experienced recruiter that I hired in was going to nail it, right? Knock out the park and be brilliant. And that's not reality, right? And I think sometimes that happens in businesses, and the cliche line of you learn from more your failings of hiring than the ones that worked out well is probably quite true, isn't it? To that, and getting it right. I think that's the hardest bit. People, everyone I ever interview on this podcast, whether it's a procurement practitioner, an entrepreneur like yourself, wherever it may be, people is the greatest strength, and it also can be the greatest weakness sometimes. So it's hard. And I'm saying that as a recruiter. It's not easy.
Yeah. No, it's
totally job, I guess.
Agree.
So I guess the things you perhaps underestimated then, or
actually, sorry, going back to the question, because I digressed there. I think other areas we've done well, like we had a patience around product that in the end has served as well. But there's a lot of the time when you're building a startup, ship fast and break things is what they'll tell you, and iterate quickly, all this stuff. And it's not that it's wrong, but actually if you're serving highly regulated enterprise customers, and if you're not first to market, it's worth mentioning we weren't first to market, so we had to be best in market. And it's something we used to talk about a lot, because I think it's a good position to be in, but you need to know everything you ship needs to be better. And the customer will start to believe that, and your prospects start to see that and think, okay, this company takes themselves very seriously when it comes to product. So we were patient there, and I think are starting to build a bit of a rep for product quality, and not just kind of hype and bullshit and whatever widget you can sell next week. And then the flip side, this is, I'd say, still a strength, but it doesn't look like it today. We're highly efficient, and that's because we've been fussy to hire, which has meant we've been slightly slower than we probably would have liked to hire. We've been really efficient. We've burned, from an efficiency perspective, we've burned a similar amount of cash to our annual recurring revenue today. So we're highly efficient, and that's pretty unusual for a venture-backed company.
In your world, and in the procure-tech world.
Massively. Right now, people are getting very carried away with, how much money you can raise and so on. So I think efficiency doesn't seem to matter in markets today. I think I like to, I've been through a couple of cycles now and a few different businesses where it has mattered. I think it will become incredibly important once the froth of the market, disappears, and we'll be really well positioned from that strong foundation. Now, on the flip side, where has been tougher, or where could we have done better? I'll try and limit myself here so we don't take the whole episode talking about this. But I think brand awareness is pretty shit. We're not a famous company, nor do we need to be, but we should be better known within procurement circles.
Mm-hmm.
And there's a really interesting stat that I was presented recently where if we look at our RFP win rate, so if we look at all of the competitive deals we're in, we win 86% against the closest competitors we have. And there's no flukes, these are like, you're selling into procurement leaders, they do their diligence, they're very discerning. So we have the right product and team composition, and we go, we're doing it in a way that leads to a high win rate. Amazing. Then we look at, on that basis, then, you should get in more deals, you should be busier. But I look at the ones we're not winning and we just weren't in them. And the most painful calls for me are where I'll have an amazing call with a chief procurement officer or somebody, and we clearly like resonate with each other's, problems and solutions. And it's like, right, this could be a good fit. And then we missed it, and they worked with one of our competitors or whatever, and they just didn't know. And often we'll win them back the next cycle. We're quite good at that too. But for me, that's a brand awareness problem. If more people knew about us, we'd be growing faster.
Yeah. And I guess some of your competitors, going back to sort of from a revenue perspective, and indeed the investment in marketing, which you talked about earlier, that, we see it. We go to these events. You've got these stands and all this big hullabaloo about certain businesses, and they're clearly pumping a lot of money into that. But it can be counterintuitive if they don't land it, and your conversion rate is very high. So it's a bit chicken and egg, isn't it? It's a hard balance.
It is.
Yeah.
I think I'd love to work this out one day when I have time, but I'm sure there'll be some sort of inverse correlation between booth spend at conferences and, enduring success. Because I
love around what that number is.
Honestly, it's wild. I look around these conference halls and it's like, what? We know the stats of most of our competitors.
Yeah.
It's like, why are they spending 200 grand when we're spending 10 on the cheapest package? Like, they're not, anyway. So the market will, sort itself out in the future, and hopefully that becomes our strength.
Yeah.
But yeah, the other area I'd say, to move on to the next, I think it's going to become a strength, but right now we build some great stuff. We've had some big AI releases recently that are like properly exciting, game changing. Like when you ship them to a customer, they are hyped, and we don't do a very good job at communicating it even to our existing customer base.
Right. Okay.
So that's probably a function of product marketing, or just comms. But we often have these scenarios where they're like, oh, we'd love it if you did this way and this. And we're like, oh no, we specifically do that. Here it is. Let's demo you. And they're like, could we use that? So it's happened organically, which is nice, but we now need to professionalize that and have a system where it's like,
get some more case studies out, presumably into the market, and referencing the sale. Because certainly I know a few of your clients that are absolutely loving what you're providing. So it's just, I guess, it's amplifying that and sharing the message. But I think sometimes it's hard, isn't it? Because you want to, we've talked about this off air, and I find this as well. You want to have that level of humility and confidence also in your product. You don't need to do too much of the real cheesy sales stuff, which you clearly don't do. But then it's like, well, I do also want to showcase the really cool stuff that we are doing. So it's the balance.
We always talk, we're a bit too British about it. Yeah. That's what we often say. What we mean is like the American version of us is like noisier, spends more in market. And to be fair, like, look, if you believe it, there's a land grab opportunity. That's a very sensible way to behave. Yeah. What we're seeing in the market is we can take customers from our competitors, be that Zip or others, and based on that, you don't necessarily have to get to every account first in a very efficient way. The market is being educated by our cumulative spend of this whole category. And so sometimes it's okay to rock up second, take them and give them a better experience. So it's two sides of a coin, but obviously I think the investor perspective in this market is grow faster. But the investors we have at Omnea and Accel were the same as with my last business, Tessian. So there's a sort of sense of trust and patience there of like, we're doing it a certain way and this will be more enduring in the long term.
The Talent Talks podcast is delighted to be sponsored by Omnea. Omnea is an AI native intake and orchestration platform that lets procurement teams focus on strategy and not systems. It creates a single front door for requests, orchestrates integrated processes across sourcing, approvals, and third-party risk management, is a source of truth for supplier data, and connects every corner of the procurement tech stack with no-code, drag-and-drop workflows. Omnea is trusted with procurement teams such as Spotify, MongoDB, and Synthesia to deliver an amazing experience, time and cost savings, and efficiency. Now let's get back to today's episode of the Talent Talks podcast. You sort of referenced, you spoke a bit already, but from my perspective, it's quite a noisy market. A lot of people out there proclaiming that they can do what you guys do and indeed what your competitors do. So you spoke a bit about how you sort of differentiate yourself from them, but what do you generally make of the procure-tech market landscape at the moment?
Yeah, so there's two sides to this, because one is a very exciting market to be in. I think there's probably been more innovation in the past 3-4 years than in the previous decade or two. There's more venture money flowing in. There's more talent flowing in. There's a lot of very exciting kind of bits and metrics you can look at where you're like, wow, what a space to operate in. Exciting future. With that, though, comes all of the downsides you'd expect. There's so much bullshit. There's so much like marketing nonsense, AI agent for this and for that. And that's tiring. When you're in the market and trying to operate with integrity and deliver a good product, it pisses you off to read it, because it's just like, you know, you'll read some of these releases and think, what complete bullshit that is. But there'll be a certain maybe type of company that chooses to believe that and gets hyped. So I think the market goes both ways, but generally I'm seeing a flight to quality in large enterprise. I think this is kind of the AI age. Buyers are more discerning than ever now. The proof's in the pudding. You can look at stuff, you can test it, you can do customer references, you can dig deep. And I think the days of these one-stop shops that say, we'll solve all of it for you. You know, you had Ariba, then you had Cooper, and now you've got others who are essentially selling a sort of shinier Cooper. And you could categorize that and say it's P2P and, you know, that's the market. This is the shape and size. But I'm typically seeing customers now and larger companies voting for sort of best of breed. They want an AI native architecture. They want this idea of orchestration where you can connect into the rest of the stack. And that gives them an ability to scale like they've never done before, ability to automate manual work like they've never done before. And it actually puts the pressure on the supplier, in this case us, to deliver a high quality experience through both tech and the people. So I think the market's quite healthy, but I think there'll be a shakeout, because if I look at segments of the market, we do third-party risk management as well. So that's like been a great area for us. But if I look at the legacy incumbents, like I don't think the future looks that bright. If you were doing third-party risk management pre-AI, it was sending, receiving, and manually scoring risk questionnaires and storing them and taking it from email and doing this and reading that one. It's so manual. It's shitty work. It's so automatable. And so I think there'll be like a roll-up. I think P will have a field day pulling some of these companies together. We've looked at a couple as opposite opportunities, but they don't look compelling. And so I think there are certain segments of the market that will be completely redefined, but the broad strokes will be, it's more about user experience, connectivity, AI native, and actually being able to deliver on ROI there. And I think, or I would like to believe, probably be wrong I've said this, but I'd like to believe that the market will catch up with the marketing nonsense, and some of these companies that continue to invest heavily in marketing stunts and make it so noisy, I think will build reps for being a bit vacuous like that, and they'll be quite transient in the market. So let's see how it plays out, but that's my current sense.
I would agree with that one. So you obviously talk to a lot of CPOs every day, every week, naturally in your role. What are you seeing as their sort of challenges? Is there some real patterns of kind of feedback that you're getting around, what their challenges are as a CPO at the moment in today's market?
I think so, I think it depends on the CPO and the company context, so many things, but like general themes, there's always a difficulty, I think, communicating kind of business value in a way that the executives understand and listen to. I think that's like the age-old problem that every CPO will talk to you about, but you know, it can be told through the lens of how to get budget for a project or to invest in innovation or headcount, whatever that might be. But generally, elevating procurement to the right level is hard. I think one of the difficulties is almost just dumbing it down and speaking in really normal terms. And there's no silver bullet here where if you say this, then you'll be elevated, everyone will listen. But sometimes I'm working with a COO at the moment who has built out a procurement function of a pretty large company. And in that case, the COO is like wicked smart, very sharp, you know, like this guy can understand whatever's thrown his way. But I think when I look at the decks and the business cases sent over, they're too complex. It's too much like procurement lingo. And it should just say simple statements. Like I had a coffee and was like, do you realize if your procurement team spend earlier and negotiate more, they'll save more money? It's not rocket science.
No, of course.
And obviously you can, you know, all of these things are like fundamentals. So you've got to figure out, is it about cycle time, efficiency, risk, or just savings? And then I think you've got to talk in a really simple language and get people bought in, and ideally have some business champions. So I think the best procurement leaders, on the flip side of that, you know, it's challenging. The best ones seem to get to know the business partners, whoever the key stakeholders are in a business, almost just like as a concierge initially or socially. They just know them, and it goes both ways. So then they're involved earlier.
Yeah.
So I'd say that's one area, is like, I'd loosely call it social capital. How do you gain that? If you have good social capital in the business, you can get budget, you can have influence, you can drive change.
Yeah. Rather than that carrot stick mentality, or, we're procurement, we're the, you see the old narrative of we're the cost police, or we're here to govern your spend. And the disengagement just drops off a cliff for the COOs and CFOs of the world. They're just not going to be interested in that at all, because it just feels very transactional. So
exactly that. And it's funny, my last business, Tessian, we were in the InfoSec space, a cybersecurity company. And that in 2017, InfoSec was today where procurement is now. Like back then, so GDPR was coming in, and that kind of put it into the spotlight. And you could see that the CISO, the Chief Information Security Officer, was going to get way more important. But there was a bit of a talent gap. The tech had been shit. It was a market of enforcement, not engagement. Like, change your password, do this, we'll lock you out. Security was annoying. It was in the way.
Yeah.
And now that's transformed, and like CISOs are, high profile, are often on boards. They're very important in the business. They're much better paid. They have more influence, etc. I think exactly the same will happen in procurement, or is happening. But you're dealing with all of those kind of both macro and micro effects. So like, there is a bit of a talent gap. That's then tough for the CEO.
That's across all board. On the talent gap, do you see that at the C-suite level of procurement, or do you see that at the more kind of category manager level, or buyer? Is it across the whole board, do you think?
I think both, in my perspective. Yeah. I think there's a lot, the roles I'm seeing, there's like, you need to be tech savvier than you historically might have done. But weirdly, it's easier to be tech savvy now than ever before. Like, Omnea is a no-code platform. It's not, you can pick it up pretty fast. So I think, yes, we need to attract better talent to the space. We're trying to play a role in that. But I'm probably asked weekly by typically a CFO, could be a COO, could be a CIO, depends who procurement runs up to, but for help hiring somebody. And it is hard, I think so. And then on the flip side, there's a lot of amazing procurement people that should be in those roles that aren't always sort of pushing their profiles in the right way. And I think the other problem, if we just look at, you asked before, what are the problems for procurement leaders in the market? It's the reputation.
Yeah.
That is the reality. And I think the best ones go in and just sort of say, look, people haven't liked the way it's done. It's shit. I'm going to fix it. We need to fix it through engaging with people and changing the user experience. We're going to make this a strategic function that positively impacts the business. But you've got to acknowledge where it is, because a lot of it is people were really pissed off at the Ariba or the Cooper process or the no process, whatever it was. And it was a thing you had to do, not what you wanted to do. So we've had to redefine this with some of our customers. Like, if you look at modern companies, we work like, say, Spotify or Monzo, they're obsessed with user experience. So their employees are probably on the younger side, or, average workforce age, and they need it to be easy and nice and helpful. And they're not the type of company to use the stick. So it's the carrot approach. You have to make it easy. But I think even if you're a legacy enterprise who have been around a few generations, the principles are still true. If you make it nice for people, they'll follow it. And if you engage them, there's an element of just having to acknowledge that it hasn't been done historically well. And it's not like CPOs are shy of saying that, because they've had a really tough time of it, where it's crazy that they get the blame for so much of the slow post or the brokenness, but it's not really their fault. They're just, in that place at that time.
Couldn't agree more. And I think it's almost, I think the CPOs that do well are the ones that have that active listening to start with. I like your bit almost being that sort of social champion and understanding each need of the stakeholders. I think the ones where it's failed is they've tried to rush in too quickly and just do it the way that they've always done it before, and it just falls over. People disengage, they lack process, and it isn't done in the most effective way. So I think that listening, understanding, and as you say, sort of understanding the business's needs to start with can allow them then to make the changes effectively. But I would agree, and I think this year has been an interesting year, and I spoke to a lot of people about this. I think what's also happened is because when the economy's been tougher in certain markets, there's always this temptation for certain C-suite to retract back to, Jesus, we need to make cost savings, we need to strip money out of the business. And ironically, it impacts procurement sometimes, which is mental, because the ROI for procurement, we all know, is amazing. And they're stripping back and getting rid of procurement headcount, or maybe not hiring a new CPO or a new procurement director to go and grow the team. And then you sit there going, well, the business needs to find some money. And in a very tactical level, it's going to be there to drive cost savings. And yet you're stripping out talent. So there's probably a bit of an upskilling and a bit of a marketing piece there for procurement as well. I would agree, because it does get a bad rep sometimes, and it is almost focused on they've not delivered, so we're going to, not grow the team or not invest in it. And it's just, as I say, it's counterintuitive. So
I agree. It is. I would say it's changing because now there's enough leaders out there who have witnessed it being done well.
Definitely.
It's a new market, right?
Yeah.
The category we're building in is, I don't know, let's say 3-4 years old.
Yeah.
And so there's enough that have now seen it and can retell the story.
Yeah.
So I think we're in a good spot, but we're definitely playing catch up to that sentiment.
But I think, and I agree, and I think procurement, the procurement leaders that are really embracing technology and partnering with people like your good self are the ones that are really thriving now. If they can get their tech stack joined up with the procurement, the commercial activity the business is doing, get the stakers on board, they're thriving. And that's the business that's we're seeing do well, and they're growing, and they go through transformations, and the board are going, oh my God, procurement, why have we not seen this yet? And it's going. The ones that aren't doing it are the ones that aren't engaging with Omnias of the world and general sort of tech businesses to help partner them to grow. They're the ones that struggle at the moment. And but it's been a good, I think, I don't know how you're feeling into Q4, but I think for us, we're feeling quite optimistic about 2026. I think there's been some really positive noises, both in terms of procurement and wider business activity. And I think 2026 should be a really positive year for the sector. That's my take on it. I don't know if you feel that's a...
Yeah, no, I'm very, very optimistic about this market. Honestly, it's from every metric you can look at, we're in a good spot. It's funny that the flip side, by the way, is procurement. If you map out the data, it's historically been anti-cyclical. So when markets are bad, procurement should be invested in. As you've said, it's not always as directly correlated as it should be.
Yeah.
But we are now seeing this trend where procurement is seen as a strategic growth driver. Even we have a lot of the world's most successful companies use our platform. They're not short of cash, but they still do want the savings, and they still want to make sure they've consolidated this, have the right suppliers. Maybe it's from a risk perspective or an efficiency perspective, or maybe it is just CFO doesn't want to be wasteful and believes in that efficiency. So I think, everything's in place now for 2026 to be really strong for our whole market, for the profession as well. So definitely optimistic.
Yeah. And I can't finish the pod without talking about AI. So what's the reality you're seeing in that? Because there's this nervousness for some people around, is AI going to replace people and all? You've probably seen that narrative, I'm sure, many, many times. But what's your take on AI and it being embedded into procurement?
So there's a few different angles to this. I think firstly, where I'm seeing it impact the most, just in a really tangible way, like team structure and growth plans, are really scaled businesses that have hundreds of people in procurement that were successfully managing most of the spend. I don't want to say they're in steady state, but they were very mature. Or, and that could be like our customers. We've got like Albertsons, large procurement team, 300,000 employee business, retailer, a very mature function in many ways. And then you've got companies where they're building out greenfield, but have resource. Who's a good example? Wise, one of our customers. Amazing fintech, but kind of rebuilding or building out a procurement function and a risk function with it. And I think those are the two areas where it's just completely game changing. In the sense of, if I look at how they use Omnia and, the opportunity ahead, like Wise will hire differently because of AI. The roles will be different, probably leaning on the more senior side where it's more strategic, and they're using the system to automate the manual work. And their role is just elevated. So it's kind of then more around the relationship side, and how to leverage that. So I suppose I see a great future. I think procurement, just fundamentally, if I zoom out maybe, it's a process with lots of data points. How many suppliers do we have? Who are they? Do we like them? How much do we pay them? When do they renew? You can keep going on, right? There's all these data points. So inherently it's perfect for AI, and a lot of the work was manual. There's all this manual shepherding of chasing them for that and asking them where that's up to. All of that can be automated. So from a macro perspective, it's a very exciting industry to be innovating with AI. That being said, as with all frothy markets and hype cycles, there's so much bullshit. And I think the risk is people buy AI for AI's sake. The reality is if your process is shit and you automate it, it's an automated shit process. You didn't make it better. So I think you need to fix the process and user experience first. Then there's better data throughput. And then you're at a maturity point where you can do incredible things with AI. And that's what we're seeing. Our most advanced customers are doing incredible things. Jobs that were previously manual just aren't being done. Like, it's completely changed the landscape for those professionals and for those companies. But if you try and do that prematurely, for AI's sake, you're not actually going to get the outcome, and then you're not building from a strong foundation. So you sort of band-aid, the problems in an unhealthy way. And I think the market needs to correct to some degree. Like, I'm, as you'll probably sense through this, quite cynical generally on these market trends, valuations, and so on. But I just think too much is being sold, too little is being delivered. I encourage everyone who's, doing these AI strategies or initiatives, be that procurement or other spaces, you've got to look at what metrics is it actually impacting. Is your savings target going up? Is your cycle time coming down? What's the efficiency metric we're tracking? It should be like, for our customers, we present that every year in a business review, and the metrics are amazing. That's why we have almost no churn. Like, retention's incredible because they look and think, shit, this is great. So I think you have to have that approach. Maybe that's less hypey and a bit less inspirational, but I think that's where the market is today. And to put numbers, I reckon it's kind of 55% substance, 45% bullshit today. Just from like, looking at what's out there, the marketing, what people are adopting. I reckon we're on a good track, and by end of 2026, it'll probably be 70-30 or 75-25 in the favor of substance. So I'm excited by it, but it's triggering as well.
Yeah, about cutting through the noise. Ben, thank you so much. I could spend longer, but I'm conscious of your time. But look, really, really appreciate you coming on the pod. Love to hear about your journey. Omnea is obviously doing fantastic things. Congratulations on the growth and the rapid success of the business. And I look forward to watching how 2026 goes for you and your team.
Great. Thanks for having me, Martin. It's been great.
Thanks, Ben. Thank you. A big thanks again to our sponsor, Omnea. If you want to check out more about Omnea, please go to their website, www.omnea, that's omnea.co. Many thanks, and look out for the next episode coming to you soon.